we're seeing a slow motion rush, not too fast to cut off the nose despite the face. Everyone said, why don't they just drain the LBMA? Because it would be over like that. Instead, you bleed it by a million paper cuts. And at some point, that becomes, the patient starts bleeding out from all the paper cuts, then everyone rushes. How far we are from that, I don't know, but I would say that to be on the wrong side of this trade right now, when you see the resiliency, the strength, where it's right back up over $50 again, after everyone's saying it'll be another 10 years before it gets back. It's over, they said, when gold broke through 4,000 down to 3,900. It's over. No, it's not. When you have the chief investment officer of Morgan Stanley saying put 20% of your assets in gold, and when I say gold, I mean silver too. He didn't say that, but I'm saying it. When you see Michael Hartnett saying no, 25%, when you see Jeffrey Gundlach saying 25%, the Bond King saying 25% isn't overweight, you see all these things happening at the highest level, talking to institutional traders. No, we're not. And silver will outpace people's expectations, and gold probably will get revalued. I do believe it will. And silver will come along for the ride. To what degree? Don't know. But even if gold was marked to market on the balance sheet at $4,100, well, let's take 4,100 and divide it by $42. That is $98. 42 is pretty much the average gold silver ratio of the past 100 years. So silver could easily double. And it's funny if you look at the way cup and handle formations are measured. You take the top of the cup with 1980, and silver's in a 45-year cup and handle. Everyone talks about that. And breaking through 50, you're breaking through the cup. You're breaking through that resistance level, the big cup, and then the handle. It's like a double cup and handle almost. But that, if you take the way you measure that in technical analysis, you take the top of the cup and the bottom of the cup. The top in 1980, the bottom in the early 90s, $4, $50. The difference, $46. You add it to the top when it breaks through, that puts it at $96. That's 42 to 1 right now, which has been roughly the 200-year average since the Industrial Revolution. So Keith Neumeyer wasn't wrong. He's just early. And I would say that silver will follow. To what degree remains to be seen, but $100 silver is not stupid. It is not out of line. And if you realize it's really coming out of the ground at 7 to 1, that's the geologic ratio. He said it again today in an interview I listened to. I was listening to an interview him today. And you take 4,000 right now and divide it by 7, silver should be $570 right now based upon the geologic ratio. So these numbers that seem absurd really aren't from a logical perspective.
That's why
if you don't, you're going to wipe out. And I say that from a skiing metaphor. You know, I've always fancied myself as a pretty good skier. And if you look at the tips of your skis, you're dead in the water. You got to be looking 10 feet out. You got to see if you're skiing moguls, you better look 10 to 15 feet ahead of you. And the same thing is true here. If you are not rolling with the changes, you get rolled by the changes. And I would rather be 6 months or 5 years early than 60 seconds or 5 minutes late. I really would. It's a curse and it is a blessing. But I think, you know, and maybe I'm just silly enough to have the courage to say it, being way early and being accused of that. But a lot of the things that I said on your show, you know, I look back and say, yeah, it was risky to say it, but somehow a lot of it has come true. And I'm not trying to pride myself as a soothsayer or a prophet or a mystic. I just maybe am open-minded enough to try and connect the dots and tell people that when most people wouldn't have the courage or even the ability to look at it, connect them and say it publicly. I do. But I often say, I don't know if I'm right. This is what I see. I connect the dots. This is where the logical Occam's razor, my logical outcome comes to. And I do think but the Genius Act in many ways has created a new monetary system, and the acts of the government in securing just about any basic commodity metal as strategic is very enlightening. It's illuminating. We are moving away from the traditional Keynesian debt-based system into one of who's got the goods. I don't want the paper promises. I want the real thing. And I think this administration understands that. I do. How about we create the largest stockpile of silver around and have it held by BlackRock and JP Morgan? We'll call it SLV. And anyone who owns it in a managed account, they can never take possession of it. I mean, it bothered people that Saudi Arabia bought, I don't know, $100, $200 million worth of silver through SLV. but they bought enough to where they can stand for delivery, and they probably will, and until the trust starts to disallow deliveries from the authorized participants who have what's called a basket. It's millions and millions and millions and millions of dollars worth. But my point is simply this. I think it would be much easier for them to come in on a Friday night and nationalize SLV and all the other ETFs that BlackRock and JP Morgan are involved with. You have the company that paid the largest fine the Justice Department ever handed out for manipulating a market, JP Morgan, and it was a silver market at that, still allowed with their buddies BlackRock to control the world's largest silver stockpile. Much easier to come in on a Friday night, take that, put that money in people's money markets and say, what? We didn't break laws or infringe civil liberties. All we did is close the account. The prospectus gives us every right to do that. Go ahead and buy Silver Eagles. Go buy whatever you want. We're not making it illegal. I think that would be their first choice, because when you nationalize assets from your own people, I think you cross a line that is almost impossible to come back from, at least in terms of trust. It's one thing to do it to foreign nations like Russia, like Iran, which is bad enough, which has already created I think, a huge loss of trust and confidence in the system. You do it to your own people, it's over. You will never be trusted by the worldwide community ever again, especially when countries like China and Russia and all of these other countries, India, are allowing, promoting, endorsing metal ownership. It makes sense to ask the question, and you should always be prepared. You prepare the best you can, but at the same time, you hope for the best. And I don't think I would worry about that at this point. I think they would have the largest stockpile in the world with a pink bow wrapped around it, held in JP Morgan vaults and BlackRock vaults, where they could do this and still have their cake and eat it too. Question is, where do they revalue gold to? That's the biggest question. And because of the geologic anomaly, if you will, the price and geologic anomaly, where gold is maybe 30 times less rare or more than platinum in nature, and platinum's main source of production is
Russia,
South Africa,
yeah.
and I think Zimbabwe. Those three countries. And when you talk about how hard it is to get supply, like in this industry, the U.S. Mint hasn't made any Silver Eagles in a very long time. I mean, Platinum Eagles in a very long time, 3-4 years, and they didn't make any this year. And I don't think next year they have it on the docket to make 2026. The sovereign mints are woefully inadequate in terms of their production. Platinum should be part of people's portfolios, but I don't know. See, gold and silver are viewed strategically and monetarily. I don't know how the U.S. government and others view platinum. I would argue there'll be a rush to get all elements that will ultimately, whether admitted to or not, be viewed as strategic. So whether or not it bypasses gold the way that it did for so long is debatable, because of the potential of gold being revalued, but it should do very well nonetheless from a percentage increase, percentage-wise. At some point, we have to be in charge of our own destiny, and I think that it would be silly to not fast track and aid in mining endeavors of all critical elements. That's what this is becoming. This is becoming a rush to secure the ability to be productive and to be self-sufficient. So yeah, I think we will see that, because you look at silver, the majority of all the silver coming into this country is coming from Peru and Mexico and Canada. We are subservient to these other countries, and that's not a good thing for something that is considered critical. I'll tell you that I've long held First Majestic, and I think they're one of, if not the most pure silver mining plays on the planet. You look at a company, what the heck is their name? They're one of my largest.
Dolly Varden will be here tomorrow, so we're talking with them about.
Yeah, Sean Kun is awesome, and I love Sean. But a lot of the big silver companies are having a hard time finding silver, so they're kind of turning into gold companies too. So I always forget their name. They're one of my biggest holdings, one of the biggest silver companies. I can't even think of it. It'll come to me. But they've bought a bunch of gold mines lately, and so I think that I think for me, it's the place to go when you don't own any would be the majors, the pure silver play like First Majestic, the royalty companies, Franco-Nevada, Royal Gold,
Wheaton.
Silver Wheaton. These are all really good plays, but the majors would be the ones that you start with, as far as I'm concerned, anyway. Because when, as Rick says, 0.5% in gold and gold and silver related equities is the allocation across the entire financial matrix. Yeah, if 5% of that money moves into mining shares, they'll start with the majors. And that's where I think you just make it easy. To buy the juniors and the exploration is very risky. And, you need to buy a bunch of them to hit it on one of them. But you're beginning to see, the juniors are starting to get purchased by the majors. You're going to see consolidation, and that's good. That's the first step that you would expect to see. So for me, make it easy. Buy the majors, buy the royalty companies, and that's a good place to start. And I always will tell people, contact my friends at Sprott in the United States, in Carlsbad, California, Sprott USA. In this industry, it's as much what you know as who you know, and they're tied in on both fronts and good friends. So I would recommend them all day long.